Hi, welcome to the market alert for Wednesday, the 13th of September 2017. So yesterday in the pound, we saw the market moving higher as we saw the release of the UK CPI figures, and they came out a lot higher than forecast at 2.9%. And this sent the pound moving to the upside, and the reason for that, if you don't know, is that there's the potential to increase interest rates, and that's good for the home currency, in this case the pound, or whichever country in the world where interest rates go up. So you can see the market there moving sharply higher and then trading sideways after it all being factored in. And again, you can see prices moving to the downside from the sell signal, but this was just at the 20 point. There's no way you'd have got the 20 points out of this one. I didn't do this trade, I wasn't watching at the time, it was lunchtime, I was missing, but looking at this, there's you'd have only got a few points out of this as the market came back. And we've also got the strength in the background here, and not only in this short-term background, but in the daily chart, as I keep saying, that we've got this move to the upside. The dollar is moving low, and we'll look at that tomorrow and heading back up to the 134.43 area, which we spoke about in Monday's market alert. News today to keep the pound moving. We'll start off in the UK. We've got average earnings, unemployment rate, claimant count change, unemployment figures to URI. They're all out at 9:30, and then this afternoon we go over to the US for the PPI, which is out at 1:30. The only one that's out when the Dow is open is the usual Wednesday afternoon suspect, which is the crude oil inventories. They will be released at 3:30 p.m. this week, and not 4 p.m. when they have a holiday. In the Dow, well, did warn you yesterday, and as every Tuesday I warn you that the market could be sideways, and certainly was yesterday. We started off with 1, 2, 3, 4 trades that weren't filled. That was the clue to begin with, that the market's going to be quiet. The range of these bars are between 10 and 15 points as well, and there was just absolutely nothing. So no reason to even consider sitting there and watching. It's like watching paint dry, and then you see after the market just going into a sideways move there for the remainder of the session. Don't know whether they're waiting to see what Apple had to announce. I'm not seeing it myself, but the market very quiet there. So everything factored in on Monday from the hurricane weekend there. And then in the Dow daily, you can see the market's an interesting picture here, actually. Let me just stop this for a second, just put the crosshairs on. You can see here that on Monday the market drove up, and we had, just bring that there, you can see low volume here on this bar. I'll get the right tool, just 1 second. On this bar, and then yesterday, even though the range is narrower, you can see that the volume is greater. So there was some selling pressure around yesterday, and that's probably why you're seeing the market down on the overnight there. But in order to move higher and take out the all-time high at 22,178, the market's going to have to drive through it, and obviously it'll be waiting to see if it can do that today. But we're back to the illusion, the lunacy, the insanity of all-time highs in these markets, when we've got all sorts of disasters going on and slow economic slowdowns, and yet the market continues to move to the upside. As I said, this is the last remaining vestige for the masses to think that everything is okay. If the stock market's up, then everything is fine. My investments are fine, I'm still making money, and everything is fine and dandy, and that's not the case at all. Let's have a quick look at the implied volatility. And once again, the magicians at the Fed are quite happy and easily moving the implied volatility lower down to 7.68 from 7.97. This is achieved, as we all know, by selling heavily into the VIX, moving the VIX lower, gives the impression that everything is fine, even though, I say, most of the Caribbean has been wrecked. Florida's had a bit of a pounding. Houston's been underwater, and the tropical storm that has become Irma is still wading its through the south as well. Staggering that this market can still be on the highs that it's on, but there you go. That's the realities of 2017 and market manipulation at its best. Right, that will do it. Hopefully things will liven up a bit today. Again, get a view in the first 5 minutes or so of the main session. The UK pound, of course, wait and see how the news, the claimant count comes out at 9:30 as well. See if that will head the market back up to those recent highs as well. Right, that'll do it for today, and I'll report in if there's anything to report in about. Other than that, as ever, thanks for watching. See you in the next one.